Hello, hi everyone. My name is Edith Young. Happy New Year. This is our first time Founders Hong Kong using LinkedIn Live. I'm super excited because this is a new tools and new year 2024. And for those of you who are tuning in now, just to remind all of you, Founders Hong Kong is a nonprofit organization with the goals to connect Silicon Valley with Hong Kong founders and investor community. And today I'm super excited to have Alfred Chuang, who is the founding general partner of Raise Capital, to join us and to talk about the 2024 predictions, what's going to happen to ventures and tech and just startup in general, everything in between. So, Alfred, thank you for joining us.
Happy New Year, Edith. Happy New Year, everyone. Very good to see you all.
Yes, and I'm very excited to have you today. I have a whole bunch of questions for you, but to start, why don't we just go right straight into the point? And the whole point of this conversation today is, will 2024 be a better year than 2023 for startups, tech, and venture capital? If we look back, 2023 really wasn't that great of a year for VC or startup. For the first few quarters of 2023, the funding only get to about 221 billion, which compare to the year before, 2022 was 381 billion, which is a 42% decline. So, Alfred, do you think that 2024 will continue to be depressed for VC and tech? Would it be like different between China and US and growth stage, seed stage? Love to hear your thoughts.
Well, thanks, Edith. Well, Edith, you're the reason, that brought me really onto the dark side, from being a founder and an entrepreneur, now spending full time investing in companies. It's been a very exciting few years for me, during this full time. It's been great. Without a doubt, we saw the ups and the downs, especially in the last 3-4 years. We saw the huge rise in 2020, 2021, all the way through 2022. And then 23 was a very, very tough year, no doubt. In many ways, I compared that to what happened in 2000, post-April 2000, when the dot-com era crashed. And then rolling into 2021, then we have September 11. In many ways, 2023 kind of felt like that, like a very destabilized world. The financial market gone through a very tough time. And in many ways, tech went through a lot of setbacks. But, without all that said, obviously, we saw a 42% decline in venture investment. So anytime when you see that, when venture shrinking the investment into the startup world, everybody felt the pain. But we still saw some very exciting thing, right? So without doubt, AI was on top of everybody's list. It literally came to the rescue, right? When we saw all kinds of issues we are facing in 2023, starting with interest rate hike, banking crisis, crypto challenges, and then all kinds of stuff. And then AI showed up in the scene. And you look at some of the deals that happened during 2023 was pretty astonishing. OpenAI, which is based in San Francisco, went through a lot of saga in the last few months. They raised $10 billion in venture round in January 2023 in a single round. So we saw Stripe, which is a fintech company also based in San Francisco, raised $6.5 billion in March of 2023. We saw a spinoff from OpenAI. So as if OpenAI alone in pushing AI, Gen AI wasn't enough. One of their spinoff, Anthropic, they raised 2 different rounds, a $4 billion round and subsequently a $2 billion round separately between September and October 2023. And in many ways, that led this huge wave of AI excitement into the marketplace. And I think in many ways, I have, a lot of people ask me, I said, well, is this sustainable? And is this something that in 2024, we're going to see more or less AI? Without a doubt, by the way, this probably is the most impactful technological innovation I've ever seen. This is bigger than the web, bigger than what I have experienced, running and creating the company throughout the 2000s. This is probably the most incredible thing that we will see the most productivity gain by human using this technology. So I think 2024 is going to be like pretty crazy. It's going to be an astonishing year looking ahead. Yeah.
So Alfred, you mean that you think even though 2023 is bad, but 2024, this year, in the new year, it will be a lot more funding again going to AI. Is that sort of your prediction?
I think it'll be a different kind of funding. So, like any hype cycle, we'll see, tech is completely based on overfunding, right? So we saw every single cycle that we've gone through, whether it's the mini computer into the workstations, into the PC computing era, into the web, mobile, social, e-commerce, every single one of those big cycles that we saw, we overly invest in a bunch of companies to kickstart a wave. So AI will be the same. So some of those companies will likely fail, right? So because this is very difficult things to create a company, sustainable company over time, not only continue to grow in revenue on top line, but growing in profit and generating cash. At the end of the day, that's the most important thing, a real business. Not all of them will turn into a real business, so I would expect some of them to fail. But then we will see the second wave coming, which is the practical implementation of AI into consumer and most importantly into enterprise applications. And that clearly has started.
Yeah. So on that note, seems like 2023, as you mentioned, the OpenAI and the Anthropic on the Cohere, which by the way are all Silicon Valley. I want to shift later on, like if we're not in Silicon Valley, what do we do? Especially all our founders in Hong Kong, how should we think about it? But back to how about prediction on the theme for this year? What are you investing in? What are some of the top themes? Because last year seems like everything is around the consumer. ChatGPT got to 100 million in I think in like a few weeks, which is astonishing. But what is the theme in terms of investment this year?
I think this is almost like a deja vu, and my muscle memory will tell me, without a doubt, 2024 will be a very big year for enterprise AI middleware, because now we need all the tooling and the system software to be able to build and rebuild package applications in the enterprise and a homegrown IT application in the enterprise that will have a neural network built inside. That's going to be probably the most important thing. If you look at the stats, right, this has already happened at the end of 2023. For every $100 people spend in cloud, 30 to 40% of that is in AI. That is unlikely a reversible trend. Even when GPU prices goes down, we now know that the interest of having AI assisting human to do processing and to do automation is going to be unstoppable. So, and the other thing, think about this. Right now, all we have seen is chat, right? So we are starting to see, text, some image, some video stuff, but it's all based on a chatting type of interface, right? So whether we're talking, we're watching a video and we have some interaction, or mostly is by texting back and forth, it's just texting. But real life applications don't work in a text form, right? We are processing business processes. So that's going to need a whole different set of software to allow us to build into the application. And these are rocket science stuff. So it's going to need startups to build these middleware to enable the enterprises and the package application builder to ease into this process of having a neural network building into the application to assist the human.
Very cool. So maybe just a quick recap in terms of the layout of the land. It seems like a lot of the high valuation last year, I want to show some stat here. In 2022, there's only 1.3 billion invested across 78 companies. But in 2023, just 8 companies raised over $21 billion. And so that is pretty much dominated by the Microsoft, OpenAI / Google to Anthropic. Do you think this trend will continue or that music is over?
Yeah, that trend likely will evolve because in any neural network, just like all of us remind what happened in search, right? Search was the biggest enabler of the internet. So you can actually get into a browser and be able to type. Initially, actually, you have to get to a search field, right? You have to go to Google, and then you type in information that you're asking for and return pages of stuff for you to look at. So very similarly, the very fundamental things in AI that trigger this whole entire wave is the ability to be able to chat, right? So building the large language model is the most crucial. And the subtleties in that is, in order to do that, we are now trying to think like humans. So that means if we learn about the first three things about anything, we can derive the fourth, the fifth, and the sixth thing. So this, which is like how humans think. Now, computer applications can do that. So in order to be able to build these very large billions and billions of parameters models, it costs a lot. So those companies sucked up a lot of that $21 billion worth of funding in order to enable it, right? So like the OpenAI, the Anthropic, the Google, and the like, they sucked up a lot of that in order to get it to this point to show the world, wow, this is real. Now software is smart enough to think kind of like human.
Now let's switch topic on valuation. It seems like everything is just so much. And the last I saw, OpenAI now raising at $100 billion, and sure, like they may have at least $1 billion in revenue, but that's 100 times valuation. That's quite insane. What do you think about valuation? What are you looking at, particular for Zeet, and how's that different from growth?
Yeah. So let me make something very clear. So Raise Capital is a seed stage investor. So our specialty is go find very early stage company. Sometimes they have no revenue. Sometimes they barely have any product, and try to kickstart the company and get it to a point where now we can insert channel into the software itself and move it into the marketplace and get it implemented. So with that, 2023 actually was a very good year for us because valuation came down dramatically in 2023. So I'm obviously now generalizing this, but rising through 2020, 2021, and 2022, we were seeing seed deals, valuation going up to 30, 40, $50 million in maybe the first or second time that people are raising money. Too much, right? When you have no revenue at all. So you have no basis on. Now that number is dropping to more like 15 million, 20 million. So you can see basically dropping 2/3, at least half of the valuation that we saw from the previous height. Most people would say, oh my God, this is disastrous for startup. But it really isn't, right? Remember, the only way to make money in startup is when you finally have a successful business. And the exit of their business, either through an IPO or a sale, that's when an investor made money. That generally is a very long journey. So I've always told people, I said, this is a very patient business. If you can't see out 7 to 10 years, right, you're not going to make huge money in venture. All the big hits are people that invest very early in these companies and back them and back them and back them and back them and continue to back them for over a very long period of time. So I think from that perspective, healthy, early, decent valuation for startup is crucial. When you're highly priced, you have no room to maneuver.
Yeah. And then so Seed you're looking at have adjusted quite a bit in 2023. Now, like between, you were saying 21 is kind of crazy, 30 to 40, but 23 is between 10 or 15. Would you say?
I would say, I said 15 is generally the medium price, but it all depends on the type of companies, the prospect, progress made, right? The founders make a big difference. All that combination of things will drive the valuation itself. Remember, this is very much a subjective thing. When people say, is valuation really a science? It really is. It's a combination of art and sciences. But there's no doubt it's a far cry from its peak in price. And I don't think this is something that we should be worried about at all. Now, growth is a whole different deal, right? Growth is completely driven by a whole different set of metrics. Mostly has to do with equity prices, stability of the market, which obviously is something that we don't have yet at this point.
Yeah.
And then that will drive late stage valuation, right? And late stage valuation is highly driven by how many companies can ultimately get exited through an IPO, for example, right? When you didn't see much of any IPO in 2023, it's a very tough year for growth deal. and that directly drive down the price.
And we talked about the super early. You also talk about growth. What's your expectation? Like last month, I spent some time in Hong Kong. Found there are actually quite a few great companies, but at the same time, it seems like, let's say how about if I'm doing like a million in ARR, annual recurring revenue, am I qualified to do a Series A? What are you seeing or expectation in terms of revenue run rate now if I'm at the wanted to raise more money beyond seed?
Yeah, that's probably is a superb question. As our job as a shepherd the company most of the time is to get them to be able to raise money at a Series A level, and that game has changed dramatically. If you look back 2 years ago, you probably don't need any revenue to be able to raise an A if the prospect is good enough, what you're working on is interesting enough, etc. Now it's a whole different business. So now sometimes that number can be quite large. It's more than $1 million that people are looking for. But it's not only the absolute number, right? It's about the size of the market you're addressing. How interesting is that market that you're addressing? And how fast can you grow? Remember, software valuation is not driven by an absolute number. It's always driven by the rate of growth. If this business can grow very dramatically fast, company will be highly valued. So that's something you always have to be focusing on. So if the market you're addressing is not going to be big enough, or the software you're working on is not addressing big enough of that piece, you have to start thinking about, expanding, the footprint of the software. And likely we may have to think about other market as well, not just different vertical, but maybe a different geography as well.
Yep. And yeah, I think the key thing for our fellow founders community is a lot of times, Alfred, as you just said, is not just about the revenue itself, but if year over year growth is only 10%, not interesting. But if you're doing, let's say, 1 million, but you grow the 100%, then it's exciting.
Exactly. Yeah.
So I have one more sort of Gen AI related trend questions for you, and then I wanted to switch to what if I'm not doing Gen AI. So in 2024, this coming year, any prediction like in terms of regulations or like who are the big guys? What are some of the key trends you're focusing on?
Actually, I was thinking about, this subject a lot lately, reading up a lot, talked to a lot of regulators and peer group about this one subject. It's a highly controversial subject, right? Because I totally understand the concern when you have Gen AI now can fake somebody's voice 100% and get on the phone. And like my mom is in her 90s, and imagine that somebody talked like me on the phone screaming for help. She may lose, some of the perspective of like asking for the right questions and end up maybe rendering money or doing something that is going to be probably pretty bad for her. So, there's obviously that crime perspective, what AI could possibly, gone into. Two is the bigger ethical question, which is what jobs will AI be replacing? We already know over 40% of the code now on GitHub is written by AI. It's not written by an engineer. So if this is happening at a software engineering level, this is going to be soon happening in other areas, in customer support and many other aspects. So is this something that we have to think about over time to regulate it? Yes. But a very good friend of mine, Tim O'Reilly from O'Reilly Publication, have actually recently published a paper. You should all read it. It's about what he said was, you really cannot regulate something that you don't understand, right? I think that exactly is our issue. The only way that we can regulate AI is when we have enough tooling, enough understanding of what to regulate it on, right? The last thing we want to do, just like any other automation revolution, just like an industrial revolution when we invented the car, right? So you would think, well, the horse is going to be extinct. No, the horse didn't get extinct. The horse is repurposed to do something differently, maybe for recreational reasons as a pet, right? And see horse racings, and then people that are doing insane sport with it. Now, but it didn't lose its purpose. It's just that our productivity gone up tremendously. If we have regulated the car, in the Industrial Revolution, we wouldn't have succeeded. So we have to be very careful what we do. So I just don't think at this point we know enough, right? So I think a good rules of regulations always is we first have to gain enough of that understanding. So I think 24 is going to be a pinnacle year as we see AI fully implemented in enterprise applications, like doing customer support for a bank, for example, or for a telephone company. For all of the consumers that get so frustrated waiting on the phone talking to your credit card company, getting your when your internet isn't working, and getting that resolved instantaneously because we have
Mm.
AI assistants. When we see that benefit, then I think we'll be able to know where to stop and where to stop. So I don't think 24 is going to be a big regulation year because it's just we don't know enough.
Yep. That's fair. Any prediction for the big guys? Do you think what's going on in Gen AI is similar to sort of the search war or mobile? Is the history going to repeat itself?
I have a unique opinion on the subject. I think it's shared with some folks, but it's definitely not shared by the masses. Is I'm certainly not looking for a large language model company to invest in. And here's the reason, right? Because if we remember what happened during the internet and what happened during search, Google wasn't the first search company. Google may have been like the 15 or the 16 search companies that emerged in the marketplace, but they were the best one.
Mm.
The page ranking algorithm was best implemented, and they were able to use their own technology to hold a lot more data to continue to refine the ranking itself. So it was
Yep.
marvelously done. But at the end of the day, how many search engines do we really need, right? So we can't just have one. We certainly need at least one alternative, maybe two. And I think the most important thing for us to know, and at that level, Google never directly monetized from search itself, right? They monetize through an alternative mean, which is selling advertisement to people that need to maneuver the ranking itself. I think
Yep.
a very similar thing is going to happen with the large models. And there's a reason why the Microsoft, and through OpenAI, and then now is whoever owns that IP, what they're doing with Gen AI large model, and Google with Bard and with Gemini, and maybe with a third alternative when Anthropic, maybe with some other open player, those people will dominate. And I don't think at the end we would directly monetize sustainably through those technology. So I wouldn't be expecting OpenAI's revenue on its own is going to be 5 billion, 10 billion, 20 billion. I seriously doubt that is going to be what's going to be happening. The much more interesting thing is not those, would be the thing that sit on top. We have very old sales productivity applications in the marketplace, right? That really have not been redeveloped over 20 years. Services, support application, ERP applications, even older, package application, a banking application. I'm not hearing people screaming and say, I love my bank app, right? I love my telco app. No one is saying any of that. So those apps have huge opportunity to drastically improve to suit the world that we're in. See, one of the things that I talk about a lot is after all these years, we're still trying to automate that form. We are mostly inputting data with very little that actually coming back to us. How many times what we do is either searching, browsing, or inputting fields? It should be
Yep.
the other way around. So I think AI will bring to us for the first time, Gen AI in particular, neural network embedded inside these applications that we'll see, wow, for every word that I type, I get 10, 20 things back. That's really is the way that how apps should work. We're just lucky enough to be able to witness it in our lifetime.
So let's switch topic. We spent the last 25 minutes or so talking about AI. A lot of founders in Hong Kong or startups in Hong Kong are not in Silicon Valley, don't have access to, well, certainly even like for China, the Baidu, Alibaba of the world are still developing their own version of LLM. And so if I'm doing a healthcare company or education company, what should I do? Like, how should I wrap my head around all this hype? Should I FOMO like the investor, or as a founder, what do I need to like be aware of?
I think the example that we'll use would be, if you imagine yourself in late 90s or early 2000, and your application is not running on the web, that should be the same feeling you should have now, right?
Mm.
Not you will become extinct, you will be obsolete. That I can almost assure you of. Okay, so if I'm the founder, I'm the CEO, and I'm the CTO, I would be spending a lot of my energy studying what I need to do with AI. You don't need to invent your own large language, honestly, because soon that will be a commodity. And not only that, you won't be using one. You'll be optimizing yourself to find multiple of these technology, which one actually will return the best answer that you're looking for. You may
Mm.
even use, RAG, to be able to have very specific stuff that you wanted to be trained for, right? For your industry, for your vertical. So I think that's a very crucial thing. So if I'm any one of those founders, the first thing I will do, you got to put energy into understanding what impact it should have and how you can think of your user can be benefited from adding a great level of automation in there by assisting using Gen AI into the applications that you have, whether it's whatever industry that you're in, And by the way, you look at one of our company, Goodnotes is a very good example. I just spent time with them in their office last week. It's a Hong Kong company, and not only that they were able to cross this barrier, but they were one of the first to put Gen AI, using training their own large model and using that to assist in tutoring students directly inside the notes itself. So this is definitely possible, right? And in order not to be left behind, the first thing you do, you got to get ahead. So I think Hong Kong or not, that makes no difference. You don't have to be in Silicon Valley to be AI enabled.
Yeah, fair point. So you mentioned today, like in terms of crazy funding, there's OpenAI, there's Anthropic. What other options are there if I want to basically potentially embed some of these functionality into what other things I should like learn more, or resources I should check out?
Yeah. So one of the very exciting thing in 2023 is I ended up spending a lot of time with my previous customers, the largest banks, the largest telcos, the largest healthcare providers, and having a chance to kind of mingle with them was very exciting because this is the first time that I saw they are now investing in system software again themselves directly, which I have not seen in almost 2 decades. And the only reason why they're doing that is because they cannot buy them. This is not available. For them to be able to build a process-driven application, like any application they use internally for trading, for servicing their retail customers, for servicing their customers online, for servicing their customers on mobile, that has AI enablement in there, they have to build it themselves. So the struggle is now, how do they determine the model? How do they train the model? How do they do RAG, right? How do they do all kinds of different things, with toolings, security? It's tough, IP infringement protection, all kinds of things. Is now they have to build on their own. So from my perspective, this is a superb time to be investing into doing this. And if I am, like you have to think, if you cannot find a complete stack, which doesn't exist today, right? You almost have to go out to build your own stack and pick pieces. We invested in a company called Vectera earlier this year, which is one of the pioneer in RAG. RAG is basically a single shot direct train on a large model that sits on top of OpenAI and Anthropic and these models to allow them to basically curb hallucination and steer the model to basically have almost like a footprint and a fingerprint and a culture of how your organization want to work. So it's crucial for all of our founders and the application that they provide. So that will be one of them for sure. I'll be looking at tooling. How do you serve and use multiple models? How do you be able to get the cheapest resources from multiple cloud, right? So we already know now you can no longer just rely on Ali Cloud, or Amazon, or just Google. Now, most of the really smart applications have to go to multiple places to get these kind of computing resources. So those are the things that I will be very focused on in making sure that our base is covered. Yeah.
Oh, right. I'm also checking out all the questions that we have on LinkedIn itself. Before I go into the Q&A, I want to, last but not least, let's talk about IPO. It seems like there aren't a lot of IPO, but surprisingly, despite the interest rate keep going up, the Magnificent Seven, they called it, started with NVIDIA, basically over 200% increase in their stock price, now over $1 trillion in valuation. What's your magic wand or the crystal ball for IPO in 2024?
Yeah. I think 2024 likely is going to be a slow start for IPO for the following reasons. Remember, going public to me is almost like a religious event. It's a growing up process for any company because now you're fully exposed. Your revenue, your customer base, all the operations in your company, your growth, your profit, your cash generation, cash collections will be fully reported on a quarterly basis, right? This is not for the faint-hearted. And once you start, it's not a stoppable process, right? Until you're not public anymore. So, and there's a general golden rule. So anybody that take you public will tell you the same thing, which is for the first 6 quarters after you go public, the great company do the following. Not only they meet the revenue projections, that obviously embedding the growth rate in there, is your profit projection, right? Whether you are profitable or you are still losing money, but that projection is going to be critical, right? It's how predictable things are. Number 3 will be cash generation. So these metrics, what they expect you to do is every quarter not only beat them, but to raise the guidance for 6 straight quarters. That's the golden rule of any company going public.
Yeah.
So I think if I'm running a company, a private company, getting to the edge that is available, the size, the customer base. I mean, overall, the company needed to go public basically to be able to show that we have arrived at that point. You have to be so sure that you'll be able to hit that 6 quarters. And right now, I think that what we're faced with is we're faced with a very unstable world, right? We have multiple of destabilized, areas in the world. We have war going on, right? We have interest rate that swing like a pendulum, like hopefully is going to start to swing in the opposite direction, but we don't know, right? We believe that inflation is in a decent shape, but that can change on a momentary basis. So these are uncontrollable, global factors that's not, we can have no control of, which is why we saw, despite such a strong equity market in 2023, few companies went public, and the one that went public did very well. So it just, the punishment is so high at this point in time. If you're a great company, this is unlikely a good time to go out until this world gets into a slightly better place, right? Or you have to, because you need access to the public money. So I'm not overly optimistic that this is going to be, at least for the first half of 2024, it's going to be an easy time to go public.
Yeah. So on that note, Alfred, I also wanted to chime in on the China side of things, particularly on IPO. There's a big anticipation and a lot of, I talked to a few journalists about Shein, which is now valued at 66 billion with revenue at 23 billion in 2022. Their market cap is basically H&M and Zara combined, which is very exciting, I think, like from the China side of things. But I absolutely agree with you. I think IPO is just the beginning of a very, very journey, not the end. And a lot of, if you cannot make the 6 quarter, it's very, very tough to maintain.
Edith, I want to clarify one thing. You have to make the quarter forever. It's just the first 6 quarters is, can you actually put the foothold in that now you firmly, establish yourself as a good public company, right? You don't cross even a 6-quarter barrier, you're not going to get there. But this is a never-ending game once you go out. Every 90 days, you're reporting and you're guiding again. Yeah.
That's right. Yeah, so I'm gonna like also kind of add on a couple more. We talk a lot about what's happening in the U.S. and I think like in also in China, just for our because in Hong Kong we have many founders. Either you go in the China market or you go into the U.S. market. We obviously Alfred and I sitting in Palo Alto right now, very focused on the U.S. trend. But I think what we're looking at in terms of China. One thing though, unfortunately. Because of CVS, we're seeing there's definitely a decoupling in terms of fundings. And for raise capital, we're very focused on investing in U.S. company, U.S. go-to-market. And we're seeing it is actually quite tough for U.S. venture capital funds to invest in Chinese company. And then vice versa. It's also very, very tough for Chinese VC to invest in U.S. startup. Because in some sense, why bother? Like if you're not going to market in either China, why would you take Chinese VC money? So something just to keep in mind. And then also for our fellow founders in Hong Kong, we are also seeing, Alfred, like you and I have been seeing many interesting, what we call a sea turtle back in the days, where a lot of great graduate Chinese founders will move back to China. Now it's the other way around. It seems like they're migrating overseas, but coming this way, or Southeast Asia. So that's definitely a couple other trends that we're looking at.
So I suddenly saw your predictions and it was very well said. And I want to highlight one other point, which is this is probably the most number of Chinese graduate students I have seen founding company in the U.S. Instead of they will go back and forth and they go back to China straight up. This is probably the most amount that I've seen them starting company in Silicon Valley. So I think the decoupling, definitely because of the geopolitical climate, is happening, right? So hopefully, I think we'll see some mending in those relationships. I think APEC that helped a little bit, and I'm hoping for more events. I think in the 2024 that this friendship can be reestablished, because it makes things very difficult for everybody, including us, there's no doubt. Yeah, and I think you're very spot on in the way that you have observed about sea turtle and other things in your prediction.
Yeah, so on that note, I'm going to quickly on our LinkedIn comment, and thank you. I see a lot of new friends, old friends joined. I want to point out Joy Tang. Joy, I know Joy for a long time, and I think she's in Texas now. Her quick question is, what kind of companies, Alfred, you raise capital looking to invest in 2024? What stage, and is it all about Gen AI? Do you invest in other things now?
We are a C-stage fund investing in the infrastructure. So it just so happened AI is a hot field, and without doubt, I mean, we saw a huge amount of AI company. I mean, I'm very flattered that we got basically access to just huge amount of early stage activities in 2023 going to 2024. But our interest is primarily interested in infrastructure level software that enable application to be built. But honestly, I think the most exciting thing we're going to see that is going to have the biggest impact will be the applications that are now will have these infrastructure software sitting inside. Package application for healthcare. Imagine doctor will automatically be 10 times smarter. What patient doesn't want to have doctors like that? Doctors are human. We need to help them, right? Radiologist, doing analysis. By just a pair of eye, having somebody on the side, a co-pilot, in looking through all of the X-rays, all the MRI, would be remarkable. I think similarly, I think in every field that we'll see in financial services, I think the future financial product will be co-created or be directly created by AI. So those would be super, super exciting. I think in so many aspects, I mean, like we are barely seeing the autonomous car emerging into the marketplace, right? Hopefully it bring much higher safety to the problem that we face with, right? You have to think car that can talk to other cars and prevent accident has to be much better than a human playing over the phone, and driving at the same time. which is something that it scares me, right? Scares a lot. So there's so many things that we're interested in. We continue to look at decentralized Web3 type activities because that's crucial, right? The future of the web has to get onto the edge. It cannot be centrally running, in just 3 or 4 or 5, cloud. It's just not going to be the case. So our interest is vast. Anything that can actually make the world run smoother, faster, cheaper, we're interested in.
Awesome. And our friends from Vectera, Bader, if you can, we should talk to you about maybe for the Founders Hong Kong community can also get a special credit from Vectera as well if we're going to start building on Vectera. So I'll ping you after. And then last but not least, my old friend Bob have a quick question. He said, I don't usually hear VC talks about potential AI to disrupt venture investing, not robo investing, but possibly can AI put us out of jobs? Like maybe actually, guys, by the way, this is not real Edith. This is actually AI Edith. So yeah, so maybe we run out of can you see that happening using Gen AI to do venture investing?
Well, if you look at actually what we do for a living, right, it's actually kind of interesting. We are, especially for us in early stage, we're purely investing in people, right? And one of the magical things that happened is post-COVID, we get to see a lot of people, live in real meetings. I really, really enjoy that, right? It's nothing beats having breakfast, having lunch, having dinner, seeing somebody face to face, because now you can feel the person. Because this is someone that if we invest in someone, you're working with them a long time. As I said, it's a long journey, especially for a seed investor. So that part of it, can some of that be helped by AI? There's no doubt. Due diligence, the crafting of the actual transaction document, even sourcing. I think many aspects of it will be implemented and automated by AI. There's no doubt in my mind. But I think putting the hammer down, hopefully, the value that we have, right? I mean, like many of you that are listening to this call, I work with on a very regular basis. Talk to our founders, right? I hope it's still the case that because they like us, they want to spend time with us. Like I have always feel that a really good investor will be able to melt into the team as if they wanted the co-founding member of the team. That would be a successful investor. Those are the investors I think, as a founder myself, would want. That is hard to replace by AI, right? That's a very human level type thing.
Okay. All right. Thank you, everyone, for spending time. I'm going to end this session with a quick game called Bullish or Bearish. And Alfred, I'm going to quickly just you don't have to say anything, and all I'm going to basically is name some industry and thumbs up or thumbs down. And so, healthcare. All right, edtech. Oh, and then another edtech, advertising tech.
Oh, I thought you said advertising ad. Advertising ad. I said that. Education tech. I said yes, like that.
Got it. How about hardware and semiconductor? Okay, autonomous car. Battery tech. AI. So, how about crypto? Okay, gaming. I think that's it. Any other industry I should add?
I would say probably enterprise applications.
Very good. Very good. Of course. With that said, Alfred, Happy New Year. Happy 2024. Thank you for spending time, and great to see a lot of our friends able to join us on LinkedIn Live today. I'm loving this platform. We will do that again for next month. And I look forward to seeing you guys and saying hello again in February 2024, and then in person for a Founders Hong Kong, also collaboration with Startup Hong Kong in March 2024. More details to come. And with that said, that will be it. And we're going to sign off now. Bye, guys. Take care. Bye.